if it is, then we could go as low as, say, 9,400, 9,450, have another brief rally, but typically when we get to one of these major changes in language, where we shift out of release language into building tension language seems to accompany declines in the market, but there's kind of a boundary effect where the language will shift and then the market direction will become apparent a week or two after the language shift has occurred. So right now, it's really clinically interesting. You've got the pipes open, don't you, Clif?
Sure. Yeah. Started it previous week. Yeah.
Yeah.
And so that'll be very interesting to see it actually come out when we get around to looking at it next week. Yeah.
Yeah, and so what ends up happening, we've been in release language. We see the building tensions beginning. Right now, we're seeing the market this one-day wonder. I explained earlier this week or last week, I guess, something called the Euro ratio. You could look at the price of gold pretty early in the day and make an educated guess as to where the Dow's going to go by taking the price change in gold and multiplying it times 10. So we saw gold pop up today, $19 and change, tack a zero on that, and that would suggest 190 for a gain, and what was the Dow? The Dow was up 199 today. So it's a very useful, kind of back of the envelope way.
But let's also stop right there for a second, reference what that actually is pointing to. What George is saying about this daily shift in gold, you can apply to oil or any of the other commodities relative to the Dow. And it's an indicator of a larger background activity going on. It basically says when they pump the dollar, then the dollar-denominated price of all commodities, including these paper assets, will rise. And this is a direct sign of the weakness of the dollar itself, because it used to be that the plunge protection team a few years back was suppressing the price of gold in order to prop up the markets, the literal Dow. Now they're no longer able to do that. They're out there worrying their butts on maintaining the illusion of the dollar being substantial. And the way they do that has got a rhythm to it that is remarkably similar to the rhythm of the gold suppression years from 2000 on through to, say, 2006. And it doesn't bode well because they won't be able to do it that long. Suppressing the gold market was relatively easy because it's reasonably small. The dollar market is the largest one in the world, and it's beginning to have ramifications. So will the dollar collapse over this year? It's my bet that we'll lose, say, another third of the purchasing power before the end of December. But what form that will take is going to be really interesting because, for instance, we're already seeing the food riots in India and the potential for rationing. They're redoing their tax structure, a real sign of government in distress in order to try and encourage imports of food into India. And it's just the beginning of a wave that will sort of pretty much go around the rest of the planet with that. So I suspect that component, at least insofar as their tax structure and the cost of rising hyperinflation in food for India, is directly related to the dollar at this point, and it's decoupling as the petrodollar. Bear in mind that the Saudis basically have said they're no longer going to use West Texas crude as a indicator for quality of oil and pricing. And so it's kind of a backhanded way of saying we're dropping the dollar on this particular level. Now, I think it was T. Boone Pickens that said a number of years back that when the dollar died, it would be in little starts, little fits and starts, as various different kinds of oil contracts were abandoned. And sure enough, here we go.
Now that doesn't mean we can't have violent rallies. In the very, very short term, this week, China probably got obviously, the president doesn't issue authority to transfer missile parts technology and missiles per se to China unless somebody's actually doing something. And the fact that as we are within a few days of the Commerce Secretary presumably affecting that transaction, we can expect violent rallies in the dollar along its general decline. That's very typical of what happened in the Great Depression, too, by the way. Everybody thinks, the Depression was a terrible event straight down, and it's never the case. You see a long-term trend develop down in a market, and it's punctuated with these violent 1- and 2-day wonder rallies. And I think that what we saw today was just a fine example of a running of the shorts. And so we'll see tomorrow when the market opens, but I'd be surprised if the market closed over 10,000 this week. It's possible, but hey, anything's possible.
Well, that's for sure. Phil, you guys are thinking that what transpired this week is going to slowly take effect over the next month in November. So what should the signs should folks be looking for in November?
Well, one thing that we're expecting is that the economic nature that's been revealed to us in the background here with the collapse of the commercial real estate lending component, which, by the way, no one's offering to bail that out, you notice, and the separation of the dollar via the Saudis as well as the Iranians separating from the dollar. They won't sell their oil to anybody in dollars anymore. Significant thing. We went to war with Saddam over that, regardless of how many weapons of mass destruction were claimed by the moron Bush. So, it was really all about the dollar. And so the scene has radically changed. We're no longer out there enforcing the supremacy of the dollar with our military, and now we're trying to buy it by selling components of our military, as George pointed out here, by the idea of maybe China will help prop up our dollar a while if we give them a bunch of missiles or missile technology or, supercomputers or whatever it is that they want. The issue for us is that... Yeah, go ahead, George.
Yeah, I was just going to say that what really, if you're trying to play along at home, the question is how much do you have to give somebody who is trying to blackmail you? And so China is right now probably laughing hysterically at those silly people from the U.S. Because they have us by the financial gunnies. They've been unloading. They've been unloading their dollar-denominated assets, and yet they have sufficient that they can still command things like missile technology from us, almost like tribute. And then when they're ready to turn around and come buy something that they want, like they'll probably be in late November to December buying wheat, for example. So when they get ready to buy large quantities of wheat or other American assets, then I'd expect them to really get serious about feeding the dollar down so that their dollars they hold will buy them more. In other words, they've got the dollars now. They've transitioned that into like gold or euros or whatever. As when they turn around and start buying our products, it'll be at not pennies on the dollar, but maybe half price.
Wow. So that's going to crush our farmers, and the ripple effect's going to be felt next year.
Well, yeah, we're already seeing problems here, too, with the farming situation, though, bear in mind, and that is that we don't have much in the way of surpluses. This has been just an abysmal year for farmers. No matter where you were, there was some kind of natural problem that crippled your production. If you were in the great river valleys in the breadbasket of the country, you had the terrible 2 months of cold weather, continuous rain, seed rotting, all of this kind of thing. If you were along any of the mountain ranges in the east, it was the cold weather and the humidity, and it just goes on and on. Even in California, they had the fire situation. So we're not in a situation where there's so much of a surplus in wheat, for instance, that any level of purchasing won't have a magnified effect. So we're going to see the hyperinflation in food and starvation globally simply because of the very bad harvest, and this is, I think, the 8th year or 9th year, I'll have to redo those calcs, that we've had a net drop or a net inability to grow enough grains to support the planet. So, and we're also seeing strange, or rather other ripples of it. For instance, if you follow certain things, then you get to see all of these trends maturing and popping up. Recently it was announced, for instance, that McDonald's isn't in Iceland anymore. Why? Well, because of hyperinflation. Every day they'd have to adjust food prices so much that pretty soon you'd be paying, $20 for an order of fries, and it just doesn't work out that way. It's just not economic for anyone. So that's the first crack in the whole corporate wedge or wall, but it's emerging out everywhere. And this November, when we get our emotional break here on the 5th, very likely around the 5th, we will see I suspect a very negative reaction, even though it's crocodile teeth in the, down for a while with release language and then pop back up the next day. So maybe 12 hours in one state, 15 hours in another 18 hours and so on, flopping back and forth in our graphs. I suspect that the overall trend will be very negative indeed for the dollar in a relatively short period of time. It might be that we lose another third or greater of the dollar's purchasing power before January of next year. Now, that should be quite noticeable.
And the kind of thing, for example, that I worry about is that sawtooth effect starting after November 3rd. That might be an on-again, off-again, Israel's really going to go against Iran, or just like, preliminary report says X happened in the Middle East, and then Y happens, and so forth. It'll be that kind of sawtooth action. From a Dow Jones, from a paper asset standpoint, wouldn't surprise me if we don't hit a market low till as late as January. We might even see some rallying in the market during the first quarter of next year. The real problem further out in the data, once we go down and test those lows down around 66.27, would be the recovery of the Dow and the other nominal U.S. paper into perhaps the end of July next year, because there's this period in the July-August time frame next year when a lot of people who study astrology and do so very successfully in the financial markets have a period. I think Arch Crawford, who publishes Crawford Perspectives, and several others say they haven't seen a period this ugly for the economy in the country in 200 years, and that's basically middle to late July through end of August. And that wouldn't be so worrisome, except that that's also when we have the real showdown going on between the U.S. population rising up in a rebellious throw the son of a guns out of Washington who got us into this mess, going into elections and so forth.
And bear in mind that we believe that a big part of the motivation of the American populace in terms of let's get rid of the bums and the revolutionary fervor stems directly from how terrible the impact is of the dollar degradation and the hyperinflation. And there's another issue here, and that is that you have to be careful relative to paper assets, because it wouldn't surprise me, for instance, to see the Dow reach all-time highs next year sometime simply because of hyperinflation of the dollar itself. So it'd be relatively meaningless if we hit 20,000 in the Dow. We're at what? If we hit 10,000 now, just adjusted by inflation, we need to be significantly over that just to have broken even since the last time it was at a peak. So a lot of the paper asset numbers, everybody's saying, well, it's I've gotten a few emails that said, well, nothing happened, and it's like, I seriously beg to differ. It's just a question of your perspective and how soon that's going to have a direct impact on your ability to buy something or the price you'll have to pay for it. And within just the last